Hello everyone, my name is Andrea and today we're going to go through our brand new trading session. I'm a market analyst in HFM, as some of you already know. So today we're going to see some technicals. So basically two crosses that they got my attention, and we're going to go through it from a fundamental perspective and a technical perspective as well. So I'm going to start with the euro dollar, the most traded asset globally and always actually. So euro dollar, as you know, ECB is out of the way for now. Next week we have the Fed, for which actually there is a lot of discussion regarding what will happen, and more precisely, after the data yesterday, which pretty much left the room open for the Fed to proceed with that well-anticipated 25 points rate cut next week. However, the latest article from Wall Street Journal pretty much shake a bit the markets, because it seems that there is a deviation in the Fed and there is a debate between the FOMC officials regarding whether they should proceed with the 25 points rate cut or a 50 points rate cut. So, but nonetheless, as I was saying, because of the anticipation of the Fed, the data also supported that we're gonna have a cut, but we need more rate cuts into the near future from the US. So that is something that added further pressure on the dollar against the major assets, and basically that risk-on tone, along with some geopolitics, also the fact that it's pretty much we have back the need of a quite aggressive tightening that causing a lot of market uncertainty is something that caused weakness on dollar, as I was saying, and increasing on safe havens such as gold, such as yen, such as Swiss, in general commodities, and even oil actually. So now let's return back to the euro dollar. Okay, even though in general, regardless of the rate cut from the ECB, once again, as it was widely expected, regardless of that, we are seeing that since May, euro dollar is in an upwards trajectory, posting higher lows and higher highs, right? So this is because the markets are always ahead of themselves. So we are seeing that a lot of pricing regarding due to basically the rate cuts, the potential rate cuts from the Fed is what is causing the dollar to weaken more than the euro. So yesterday, this is the 4-hour chart that I wanted to talk about, and yesterday we have seen, basically this week, we have seen the retest of 200 period moving average. The rebound, actually quite a nice support over here, a nice rebound back to 110.90, and currently flirting with 111 territory. And also a shift of the MACD into the positive territory, even though the signal line is still negative. So it looks from the high Kenashi candles that this rebound is not over, right? So it seems that there is still room for a retest of 111.30 territory, which is our next immediate resistance level. However, I would like also to apply sorry, to apply at this the regression channel over here. And I would like to show you that it looked that it was broken 2 sessions ago. Okay, so for 3 seconds, nearly 3 sessions in a row, we are seeing that euro dollar is holding gains and stays away from this channel. So this is a very important resistance zone. And as I mentioned, it seems that there is an appreciation of euro dollar with the prospect of kicking this 111.30 territory as we have the asset moving above both moving averages. MACD turned positive, even though a confirmation will come once we see the signal line also crossing zero line. RSI is at 64 territory, a bit flat, doesn't look that there would be any reversal yet. And the Heikin Ashi candles are still quite strong. So we need to wait and see whether we're gonna see another attempt to the upside. Okay, now in the 1 hour time, a 1 hour time frame, this is what presents that bulls are in control. So even though that was a key resistance territory, we haven't seen a reversal. We have seen a slight correction and a resumption to the upside with the intraday momentum strong. So there is still some room to the upside. So keep an eye on that. Now, last but not least, I would like to show you pound yen and euro yen. They both, this is a daily chart for euro yen. They have both of them. I'm going to show pound yen as well, but let's stick on euro yen for now. Both of them returned back to July's bottom. That is considered to be actually a multi-month bottom. Basically, it's an area that it's a very, very strong support level since June last year. Okay, so a year now. The one I'm referring to, the 154.40 level. So euro yen, due to this risk on tone, carry trade. Don't forget that yen, other than the safe haven, is used for carry trade. So also consider that Bank of Japan is expected to increase rates, while on the flip side we have the ECB cutting rates, so that leads to weaker euro against a strong yen. So we had another down leg for nearly 2 weeks in a row, back down, currently at 155 level, but also we can see that there is an increasing bearish bias once again, presenting that the sellers are back in play, correction is over, a pullback has started. So have in mind, ahead of the US Open, but also ahead of the new week, that a confirmed break of this bottom of this of the early September bottom could open the doors to 154.40 or even lower if we consider the medium and long-term picture. But our immediate support level is down to Monday's lows, which is at 155. Let me be precise, 155.40. So a break of that could signal the retest of 1 year's bottom. And actually, having this in mind, you should add a trend line over there, because in the medium or long term, a decisive and confirmed breakout and a consecutive move below the 154.40 could open doors to 150, 147. So it could lead to a free fall. But that's it. It's in the long term. Pound yen, the same condition, the same situation. I return back to here we have some hiking ashy candles. That's pound yen in a 4-hour chart. Consecutive bearish hiking ashy candles, strong ones. Already returned back to the week's bottom. The immediate support level could be seen with this nice Fibonacci extension tool down to 183.97. That's the immediate support level. And the very next one, if we've seen extending lower, it will be 182.25, and basically August bottom down to 180 level. So a very strong downtrend for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. So keep an eye on that, especially now ahead of the weekend, and especially on the Asia Open on Sunday, early Monday, basically. So yeah, that was pretty much it from me, guys. Thank you very much. Hopefully you enjoyed. Take care. Trade what you see, not what you think. And we'll keep in touch next week once again with another 3 trading sessions. Thank you very much. Have a great day ahead. Have a great weekend ahead. Thank you. Bye-bye.